Welcome back to my YouTube channel. In this video, are you tired of watching your hard-earned cash lost away in the markets? Well, discover the game-changing swing trading strategies that will stop losses and start winning. Our ultimate approach has been generating incredible profits for savvy investors. Don't miss out on this opportunity to unlock the full potential of swing trading. Prepare yourself to unleash the full potential of swing trading. Strap in and get ready for an exciting journey ahead. Watch until the end and witness your trading life transform before your very eyes. As always, nothing in this video is financial advice. It's all for informational purposes only. Open the trading view. We are going to find for the following indicator, which is a CCI indicator. However, before we begin with these high probability trade entries, make sure you hit the like button on this video. Also subscribe and turn on the bell so you never miss out any of my future videos. The CCI technical indicator, also known as the Commodity Channel Index, is a momentum-based oscillator that's used by traders to measure the deviation of an asset's price from its statistical average. The CCI was initially developed for use in commodity futures trading, but it has since been adapted for use by other financial markets such as stocks, forex, and cryptocurrencies. The CCI indicator is typically used to identify potential overbought and oversold conditions in the market. It does this by measuring how far the price of an asset has moved away from its moving average and comparing it to the asset's typical volatility. This difference is then normalized to fit within the range between plus 100 and minus 100, the values above 100 indicating overbought conditions and values below minus 100 indicating oversold conditions. Traders typically use the CCI to identify potential buy and sell signals when the indicator crosses above or below these threshold levels. In addition, traders may also use the CCI indicator in conjunction with other technical indicators such as moving averages or trend lines to help confirm their analysis and to build a more comprehensive trading strategy. Overall, the CCI indicator can be a valuable tool for traders looking to gain insights into the momentum of an asset's price and to make more informed trading decisions. However, it's worth noting that the default settings of the CCI indicator may not always be the most effective for every trading strategies. As you can imagine, a scalper isn't looking for the same information as a swing trader. In order to maximize the effectiveness of the CCI indicator, we need to make a few adjustments to its settings according to our specific needs and preferences. For the first CCI indicator under the Inputs tab, we are going to change the length from 20 to 14. Next, under the Style tab, we are going to change the CCI color to red and the line thickness to the second option OK. For the second CCI indicator under the Inputs tab, we are going to change the length from 20 to 100 and also adjust the style. Under the Style tab we are going to select yellow and again change it to the second line thickness. Now that we've made the changes to the CCI indicator, we need to integrate them together so that they can be used as one indicator which will provide us with our entries. To integrate these two CCIs, traders can click on the three dots on the longer period CCI and then move to the existing pane above. Then click on the three dots again and select Pin to Scale. Finally, click on Pin to Scale A to complete the integration of the two indicators. You'll notice by adjusting the settings of the CCI indicator and integrating it into our strategy, you can improve the accuracy of their trading signals and make more informed trading decisions. Let's take a look at an example. On the chart we have the Euro-USD on the hourly time frame for a valid buy trading entry. We can use the integrated CCI indicators as follows. First, we need to wait for the fast red period CCI to go above the lower band, which is indicated at minus 100. The situation on the CCI can indicate that the potential pullback is forming on the charts. After that, we wait until the red CCI crosses above the yellow slow period CCI and goes above the upper band, which is marked at plus 100. It's important to note that we should wait until the candle is closed and the red CCI is fixed above plus 100. When all these conditions are met, we can enter a long position. At this point, we should place a stop loss below the previous swing low and set our profit target at a minimum of 1:1.5 reward ratio you'll see from the chart. By following these rules, you can potentially identify profitable long trading opportunities with a high degree of accuracy. Next, let's take a look at the exact rules for sell or short trades. When you're looking for short opportunities using the CCI indicators, we need to follow a different set of rules. First, we should wait for the fast red CCI to go above the upper band. Next, we need to wait for it to go down and cross the yellow CCI, and then finally it goes down below this lower band. When all these conditions are met, we can enter a sell position. When the new candle is opened, it's important to place a stop loss above the previous swing high to manage risk effectively. Similar to long position trades, traders should aim to set their profit target at a minimum of 1:1.5 reward ratio, and you would have noticed that the strategy provides us with high accurate entry possibilities and opportunities. However, relying solely on these two indicators can be problematic when entering a ranging market condition. For this reason, we are going to add our third indicator to our chart. Go to Indicators tab. We are going to search for the following indicator, which is a pivot point super trend by Lonesome the Blue. However, today I'm going to show you how to set up this indicator for our swing strategy. First, under the settings for the super trend indicator, change the ATR factor from 3 to 15 and also change the ATR period from 10 to 30. The idea behind the indicator is finding pivot points in the market, then calculating the average of these pivot points, and like a super trend indicator, creating higher lower bands by using the ATR indicator, which is the average true range. Specially, traders use the super trend indicator to identify potential areas of support and resistance. These levels are calculated based on the previous day's high, low, and closing prices. The primary support or resistance level is called the pivot point level, and the other levels around it are considered potential areas of support and resistance. You'll see that the pivot point super trend indicator is weighted more by past pivot points. This is done by the indicator for smoothing out the trend. What this all means is that the indicator can keep you in the trend for longer, giving you more and bigger wins. As always, feel free to test out the strategy for yourself with stuff that you guys like to trade, right? Like Forex, crypto, stocks, whatever it is. Like all other indicators, make sure you do some back testing as well. Okay, so now that we have all the necessary indicators set up, let's dive into specific rules for entry long and for the entering long and short trades. Let's begin with a sell trade and the exact rules for entry. On the chart we have the GBP USD on an hourly time frame. Additionally to what we've already discussed for the sell trade, we now also need to align ourselves with the overall trend in the market. Our first rule is that the super trend needs to currently be showing sell and the line should be colored red. Next, we need to wait for the fast CCI to go above the upper band plus 100. Next, we need to wait for it to go down and cross the yellow CCI line, and then finally it goes down below the lower band, which is the minus 100. If all these conditions are met, we can place our sell order at the close of the price bar. For this sell trade example, I'm going to place my stop loss above the recent swing and aim for a minimum of 1:1.5 risk to reward. For this example, I'll set my stop loss as 50 pips and my take profit will be 75 pips, giving us a 1.55 risk to reward. Alternatively, you can place your take profit at the next level of market structure as well. You'll notice by adding the super trend indicator to our swings trading strategy as an additional confirmation, we are further able to increase this highly effective strategy. The principle behind the swing trading strategy is joining an existing trend with precise accuracy so that we can take advantage of the large swings. Next, let's take a look at another sell example. However, this time it's going to be on a different instrument. On this chart, we've got gold in an hourly time frame. First, you'll see that the supertrend indicator is currently red, meaning we are only looking for sell trades. Next, we need to wait for the red CCI to go above the upper band. After that, we need to wait for it to go down and cross the yellow CCI line. And then finally, it needs to go down below the lower band. Once all these conditions are met, you can place your sell order at the close of the candle. I'm going to place my stop loss above the recent swing and aim for a minimum of 1:1.5 risk to reward. As you can see, easily achieve your target. This brings us to the end of this video. If you like this video, then be sure to subscribe to our channel so that you don't miss on any of our new content. See you soon. Thanks for watching our video.